Hi, my name is Jim and I was retired. Would you rather pay high taxes on Roth conversions, low taxes on Roth conversions, or no taxes on capital gains? Stay tuned to this short video when I'll be examining your tax scenarios. When you're retired, you are in charge of how much income and how much taxes you pay. By structuring your retirement income, you can dramatically change how much taxes are due. I covered that in my last video on considering the Roth conversions and all of the tax tripwires. Avoid some of those tripwires and you avoid high taxes on your Roth conversions. But in that spreadsheet, I played around with it this week, and I've discovered that how you alter your income between capital gains and ordinary income from your retirement accounts can dramatically change your tax profile. And I'm going to do a short video this week, and I promise a short video. Last week's wasn't short, I'm sorry. But I'm using the same spreadsheet, so if there's anything that you don't understand on this spreadsheet, go back to my last video and look at the formulas. I'm going to one tab, and I'm going to show it to you on several tax scenarios that you could consider for the same amount of income. I'm going to stay below the $100,000 threshold for New Jersey's retirement income exemption, but I'm going to structure various combinations of capital gains and ordinary income, and you can see how much the taxes will change. It's eye-opening. Follow me. As you might have heard, I actually got the community page on my YouTube channel with only a little over 500 subscribers, but I'm still looking to get over 1,000 by the end of this year. Can you help me get there? Please like and subscribe and tell people about this channel, A Consumer's View of a DIY Retirement. I'm not a professional and I'm not here to sell anything. I just want to share ideas. So here we are back on the same spreadsheet that I shared last video. It includes the same formulas, so I'm not going to spend a lot of time on the formulas. Go back to my other short video, and I apologize for that, if you need the details on the formulas below. But this includes scenarios, and I'm just showing you here it's the same scenario of $10,000 worth of capital gains, qualified dividends of $1,900, ordinary dividends taxed at ordinary income of $1,600, interest income of $3,000, retirement income from your IRA taxed at ordinary income tax rates of $83,000 for a gross of $99,500, just below that $100,000 threshold for gross income for New Jersey's retirement income exemption. Standard deduction for a married couple filing jointly with one person over the age of 65 brings taxable income down to $73,050. New Jersey taxes exempt the retirement income, and so it is $16,500. And they, if you recall, the second attempt brought the federal tax down to $69.40, and New Jersey plus the second attempt was $71.71. And I just wanted to go through that to show you it's the same formulas here. All I did was copy these rows here over to this page, cleaned up the columns a little bit to give you a chance to then copy and paste those down the rows here to various scenarios. Because I wanted to start to look at what happens if instead of the $10,000 and $83,000 in the first scenario, I alter that a little bit between more capital gains and less retirement income. It increases your New Jersey income but what does it do to the total tax hit? And that got me thinking about, okay, let's lower the capital gains $5,000 and increase the retirement income. Lowers the New Jersey tax income, but what does it do to the total tax? And I played around with various scenarios of different amounts of capital gains and different amounts of retirement income. I left these three columns the same. Created these bar charts. Now they're all equal because they all equal $99,500 because you're staying below the $100,000 gross income level so that your retirement income is taxed exempt in New Jersey. So these are the scenarios that include the retirement income, ordinary income, qualified dividends, ordinary dividends, and capital gains. And you can see some scenarios have a lot more capital gains, some have a lot less. They all equal the same amount of income. But look at the tax hit. The various scenarios, 7171 was what I showed you in the last video, taking a lot more capital gains and less retirement income brings the tax hit down a lot. Taking less capital gains, more retirement income increases it. And is there a sweet spot in here where you can get capital gains and retirement income to give you the best tax hit? And that's what it really comes down to when playing with tax scenarios. Take a look at how your taxable income is going to be treated, how your New Jersey retirement exemption is going to be treated, and how your tax brackets hit. Play around with them and find out what's best for you. This makes me think that I need to play around with scenarios until I'm sure that a Roth conversion is better than taking more capital gains from my taxable accounts this year. And that's what I'm going to do as I approach the end of this year. Now, this chart is now available in my Google Sites, and I wanted to use the rest of this video just to give you a quick preview of what's over there on the Google Sites. I've been working to organize it. So let's pull that up. I warn you, it's still a work in progress. If you see any broken links, let me know. But this now includes a front page where I'll post the videos. The current video is going to be posted right about here. So down here on the home page is another box that says See Resources. I've moved the PDFs, web links, and spreadsheets that I'm going to share to the resource pages. And you can get to those by this menu over here. And I'm going to show you first the index of episodes that I've worked out. Now over here on this index of episode page, you'll see each of my episodes listed on the YouTube channel with a link to either links or spreadsheets. And where I have PDFs to share, I put in See PDFs. So let me go through several of those pages now. On the PDF page, I'll list the most current PDFs available. Hopefully, I'll build this library up over time. And this one will include that PDF of the tax scenarios. And you'll be able to open that up, download it, and study it. Now, let me show you over here on the other resources page. The resources page will show you the PDFs that I've shared, the spreadsheets I've shared, and the index, and this page. On this page for links, I've gone through all of the YouTube details from the prior videos, and I've copied over the links that I've shared in the YouTubes. Here's one easy reference of all of the links that I've shared in past videos, and I'll keep this up to date. It includes many links, and you might find some information here that'll help you with your retirement planning. So all of these links are available. Again, if there are any broken links, let me know, and you can do that down here. I put a footer on every page. See my YouTube channel, check out my Twitter feed, and email me here at my yahoo.com email address is the one that's tracking into my desktop. It's the easiest way to reach me. So let me know if you find any broken links with that email below. Now over here on the About page, it includes the story that you've heard if you've been following my YouTube channel, that I began this YouTube channel to share entertaining ideas about how I've managed a forced early retirement. It can be done. Grab the bull by its horns and you can manage your retirement. Take a look at this Google Sites and see if the PDFs and links and spreadsheets, I have a few, I will tell you that Google Sites doesn't play well with numbers. And so, for instance, on this most recent spreadsheet, I'm using XLOOKUP. Google Sites doesn't have that. And so it's going to take a little bit of time for me to figure out how to translate them into formats that you can use. But where I can, if I've got a simple formula where the functions work, I'll share my spreadsheets. So thanks for joining me, and make sure you check out that Google site. Now, I should explain, I am not a professional. I have no special initials after my name. So take these as entertaining ideas from one educated consumer to another. Always do your own due diligence and seek out a professional if you need one.